So, are you retiring or turning 65 in the next 5 to 7 years and want to know how to prepare financially? In this interview, we're going to discuss some of the biggest questions we get from people that are approaching retirement. Hi, I'm Rick Teska with Strive Medicare, and I'm here with my good friend and financial professional Justin Wise with Edward Jones. Today, we're going to be talking about how to be financially prepared before you retire or turn 65. So, if you're age 60 to 64, this video is for you. Before we get started, let me introduce myself. I'm Rick Teska. I've worked with Medicare for almost 40 years. My company, Strive Medicare, helps people navigate Medicare. We work with Medicare supplements, Medicare Advantage, and Part D prescription drug plans. Justin, tell me a little about yourself.
Sure. Thanks, Rick. Thanks for having me today. So I started investing actually when I was about 12 years old. My grandpa got me into it. He was kind of a child of the Great Depression and saw the value of investing in for the long term. So I started with him, investing with a stockbroker in New York, I think it was, and went to college and ended up getting into the financial field. And I'm married, I have 4 kids, and I've been doing this for almost 13 years now. So I work with Edward Jones, and I have an office right here in Onalaska.
Well, thanks for sharing that, Justin.
Yeah.
Justin, we've known each other for several years. We met through a youth mentorship hunting program.
Yeah,
where we
right.
took kids hunting, and that was fun to get to know you through that. And then we also do CrossFit together,
Yeah.
and that's fun at times.
Right.
Sometimes it can be kind of difficult, but and
Yeah,
challenging,
Right.
but a lot of fun. It's been getting to know you as a friend, and now in the professional aspect as well. And I know you've helped a lot of our clients with some of their retirement stuff too,
Yeah,
and
right.
it's been pretty valuable. So thank you for that.
Yeah, and I would say the same for you. You know, a lot of my clients have questions on Medicare, and I don't specialize in Medicare, I specialize in financial planning, and so the relationships worked out really well. So
Yeah,
appreciate
it
you
has.
having me here today.
Absolutely. So let's talk about 5 questions that we get all the time from people that are approaching retirement. The first one we get, the one to talk about, Justin, with you is, what's the number one thing you recommend a person do to prepare financially to retire or draw Social Security and go on Medicare?
Sure. Yeah, I mean, I would say the thing that I've seen that's been most beneficial is, you know, starting early. So, 4 or 5 years prior to that time that they turn 65, to really get together with a financial professional, someone who's going to sit down with them, start the planning process, be able to look at their entire situation, and really start to get insight into their specific lifestyle goals, kind of their needs. That's one of the biggest things, is because, you know, this isn't the retirement that we saw in the past where you'd work somewhere for 40 years, you'd get your pension check, and that's all you had to worry about, and then Medicare picked up and you were good. Many employers provided medical insurance until 65. And that's no longer the case. So I think the planning part is really what I would say is most important. So sitting down with someone who's going to really look at your goals and put the numbers together to start that early is going to be one of the biggest benefits as you start to approach retirement.
Sure. I know we mentioned 5 to 7 years early in the video, but really it's probably even earlier, right? Would you agree that it's never too early to start planning for
Yeah.
retirement and kind of get an idea of what that looks like?
Yeah, I would say so. I mean, there's a lot of strategies which we'll get into some possibly that are important, but yeah, the earlier the better. And also I would say, like, it's also never too late. So, even if you're like, oh, I'm a year out, maybe I should have done this earlier, it's still a good time to sit down with someone who can, maybe there's some strategies we can put into place that, working along with someone like you, can plan this out. Like I said, we'll get into that a little bit here through our conversation. But
Sure.
Yeah.
I even know firsthand a customer that comes to mind that they actually did retire, came in, we were going Medicare, and they hadn't done any planning, and I know they were very thankful for meeting with you, and so it wasn't too late.
Right,
They
yeah,
were still
exactly.
able to solve some issues that they had, correct?
Yeah, that's very true. And the hardest thing, and you probably would see this too, is when someone has, done nothing and is unwilling to do any planning. It's really challenging to try to put some kind of plan together and plan for income limits and all that kind of stuff if they're really not digging into the numbers with someone. So, yeah.
Good. The second question we get, if someone has a 401k or retirement plan through work, what do you recommend they do?
Yeah, that's a great question. So 401ks have changed a lot over time. there's a lot of planning that can be done early on where a lot of 401ks allow you to contribute into a Roth portion, which is tax-free income in retirement, which impacts what you pay for Medicare in the future. There's Roth conversions within 401k plans now where you maybe have a large balance in the traditional 401k where you pay tax on every dollar that comes out. You can convert that through your lifetime up until you retire to get that money so that it will be tax-free in the future. So there's a lot of tax planning that can actually kind of be done within 401ks. But again, that's something that you really want to sit down with a financial professional, your CPA, and even someone like yourself to kind of get some of those ideas put together. So the other thing is if you have a company that's doing a match, at least get the match. That's extremely important. And fund it as much as you can because, like I said earlier, there's no longer, very rarely do we see pension income providing for people's retirement. It's the money that you've set aside, and so you got to be doing it.
Okay.
Yeah.
So you're telling me if someone has a 401k that they had through work and that they take the money out, that money's taxable. Is that correct? If they just draw that out, that's taxable. And you're saying that there's plans out there that they can use or tools that they can use to avoid taxes on that 401k?
That's correct. Yep. So with the right planning and getting all the pieces into place, there's ways to, and I kind of, look at it as you really want multiple buckets of money. So some that's going to be taxable when you take it out, some that's tax-free, some that's only going to be subject to capital gains tax. The more flexibility you have, the more control you have over your taxes and more control you have over your Medicare costs, honestly.
Okay. I like that idea of multiple buckets of money. So I know what's in each bucket and what to expect out of it. That makes sense. I like that. Yeah. The next question that we get a lot, and it kind of segues off of what we just talked about as far as taxes, and that is, how does IRMAA play into retirement and Medicare?
Sure. Yeah, so I think that's something with your question about the 401ks and income planning. So that's a big part of all of this is really planning where your income is going to come from, because with that IRMAA calculation, it's based on your income in retirement. And if all of the money that you're pulling is 100% taxable to you, and it depends on your lifestyle, if you're wanting to do a lot of travel and things like that, the more you spend in retirement, the more you have to withdraw. Also, then the more that your Medicare supplement or your Medicare will be based on that withdrawal rate. So again, It comes down to knowing that you have the right buckets of money to pull money from.
And we probably should explain a little bit about what IRMAA is to people. And what that means is basically most people, when you go on Medicare, Medicare runs $170 a month. However, if you have certain levels of income, that instead of $170 a month, it's going to be more. Correct?
Yeah.
I mean, we've had some clients come in that didn't do any planning, and instead of $170 a month, it might be $400 a month, and it's quite a surprise when they are talking to their neighbor or friends, and they're telling them it's $170 a month, and now all of a sudden they're getting a bill for $400.
Right. Yes.
Those are the kind of surprises you want to avoid, and so that's what IRMAA is. It adjusts your Medicare premium based on your income.
Yeah, and I would say this too, you got to keep in mind that looks back 2 years. So this really comes to play, like if you're a business owner and you're selling a business and you have higher income in those 2 years prior to retirement, you may pay a high amount for Medicare because of your decisions 2 years prior. So that's where, again, that planning comes into play, where if you're selling a business, maybe we want to do it in 1 year, big one lump sum, or we want to do it over a few years. It's really, you got to be kind of strategic with it. I've even seen it where someone sold a couple apartment buildings because they didn't want them anymore. Well, that hit their IRMAA number, and they had astronomical Medicare costs for a couple years until that dropped off. So that's the other part of it, is it looks back at the previous 2 years, and that's important to know that.
Yeah, exactly. One of the more reasons to plan ahead.
Right. Yeah,
Don't
exactly.
wait. Yeah. We're going to have a link below too, so if you want to look at that chart and see where you're at as far as income and what that looks like, we'll have a link below so you can access that chart and take a look at that and see where you're at and what those costs look like. All right, so question number 4. What tools are available to prepare for the gaps in Medicare coverage, specifically with regard to long-term care costs and planning?
Sure. Yeah, that's a good question. With long-term care cost planning, we see there's a lot. in the past, there was kind of only one option. It was traditional long-term care insurance, and a lot of people saw premiums continue to go up every year. The more people that had claims, their premiums would go up even more.
We worked with a lot of those.
Yeah, right.
Those people.
Yeah, right. Yeah, and so we've seen that just hasn't worked out very well. And so the question is, well, what's available now? And there's a lot of new kind of hybrid products because at the end of the day, really kind of everyone self-insures unless they have some type of protection through insurance in order to cover that gap in the cost. Because as you know, Medicare really doesn't cover anything for long-term care.
Sure, and a lot of people, I'm surprised when they get to Medicare, think Medicare is going to cover long-term care, and in actuality, it doesn't.
Right. Yeah. And I would say on that too. Again, it comes back to sitting down with someone to kind of run the numbers, because there are many people who can fully self-insure. They don't need long-term care insurance. There's some who it's too expensive. Even with the new policies and the new products, it's just too much. And there's a certain group where it's affordable, and it's going to really protect a lot of assets so that they can stay within your family, go on to your heirs, versus having to spend down to get on Medicaid, which is what most likely would happen if you didn't have coverage.
Okay. So is there any tools? I mean, a lot of times we run into people. I mean, there's almost like two different groups of people. Mm-hmm. People that can self-insure, but sometimes we run into a lot of people that maybe are kind of on that border where they don't qualify for Medicaid and have assets, and are there certain tools that those people should be aware of that maybe that they should still do some planning to protect certain assets if they do end up in a nursing home? Repositioning and doing some things that to protect assets?
Yep. Yeah. And so that's another big part of it is, in all this is kind of putting together the right team. So this is where we'd probably bring in an estate planning attorney, where they'd be able to kind of help to say, here's what we can do with your estate in order to protect some of the assets from being looked at for Medicaid. And then, also just kind of that overall, how do you want your assets to go if something happens to you? So it's really kind of putting together the team of, financial planner, Medicare professional, estate planner, and you get all those people on your team working for you, you're probably going to win, right? Mm-hmm. So that's really what we're trying to look for.
Good. Yeah, and that's huge. I mean, I bet we get those questions all the time as far as a nursing home. It's a big concern nowadays for a lot of folks. Mm-hmm. I mean, when I think the numbers change all the time, but I think recently it's the average cost of nursing homes today are above $8,000 to $10,000 a month.
And that's just for one person.
So
you got a couple, you're at
right. So you're talking $100,000 gone pretty quick.
Yeah. Right.
If you're faced with long-term care.
Yeah. And there's going to be some times where as much planning as we can do, there's nothing we can do, right? But most of the time, there's always something that we can do to protect some of the assets. Yeah.
Okay. Good. The fifth question: What is the best advice for making money last while retired and on Medicare?
Sure. Don't spend it.
Yeah.
No. No, I think really what I've seen in all these years of doing this is the biggest drag to your financial future and freedom is taxes, because that's a known cost, it's a given cost, and it increases with the amount you spend. And so really getting back to those buckets of money, having multiple sources of income coming from different types of taxable or non-taxable accounts, that's how you're going to make your assets last. Obviously, owning the right investments, having the right plan, taking the right amount of risk, that's a big part of it. But I can't control the market, right? But I can look at how much taxes you're going to be paying based on where we're pulling from. So if we can, that's a known number, and so if we can work on that part, I know for certain we can avoid a certain amount of your assets having to get spent going straight to the IRS, right?
Sure.
So I think that's a big part of protecting those assets or making them last long enough is how much are you spending? And even if it gets down to Medicare, right? Like if we can keep your income within certain ranges, you're going to spend less on Medicare, right? And I think that's the kind of thing, like we're trying to get you to have less going to taxes, more that you keep.
And speaking of taxes, I think one thing we didn't touch on too is as far as Social Security.
Yeah.
I think a lot of people are surprised that they start drawing Social Security without really thinking through that it could be taxed.
Right.
Correct.
Yeah.
So for some of those people, when they turn 65 or whatever their retirement age is. Correct me if I'm wrong, but isn't Social Security, couldn't it be subject to tax if they earned a certain amount of income? Is that right?
Yeah, that's correct. There's certain limits or I guess you call brackets where Social Security becomes taxed. The other thing to keep in mind is that when you take Social Security prior to your full retirement age, which is different for everyone, you are only allowed, at least this year, to make a little over $19,000. Otherwise, they're going to start to pull in or take away what your Social Security benefit is. So you don't really want to be the person who takes Social Security and is still working full time, making over $19,000 a year, because it doesn't make sense. They're going to just they're going to reduce what you get in Social Security because of those earnings. So that gets again into the planning side, where we want to say, hey, here's probably for this specific person the most ideal time to retire, and we can start doing that tax planning side of it too, with your CPA, myself, you as well, kind of getting that together and having that all put together in a plan so they know here's the best time to do it, here's how to do it, and here's how to minimize taxes. So yeah.
Well, good. This has been fun.
Yeah.
And we've talked about doing this before. We've even joked maybe you'll see a podcast or something we'll start in the future, depending on how this turns out. But this has been fun.
Yeah.
Anything else that you want to add, Justin, that we didn't talk about or touch on with today?
Yeah, I mean, I think what I find in my business is just that a lot of people have questions on the Medicare side, and I think that's where you come in. Your team can just really help to run those numbers so that people can come into it, and every one of my clients who's worked with you has said, hey, thanks for clarifying that, because it's just there's so much detail, and that, but you're in it every day, right? And I get the same thing with me. I'm in finances every day. I understand it because it's what I do for a living. It's when you're outside of that and you're trying to figure it all out on your own, it gets very confusing. And so I guess the big thing is just that both you and I are here to make things easier.
Right. Yep. Yeah. That's a good thing.
Yeah.
That people have people like us to turn to.
Yeah.
Because it does become overwhelming. I think whether, like Justin touched on, whether it's Medicare, there's so much information and misinformation out there. And to have people like us that you can turn to for those things is very helpful.
Yeah. Right.
Yeah. Well, folks, that wraps up our interview with Justin. We hope this information has been helpful as you approach your retirement years. Also, check out the links below to connect with Justin and find other helpful content like our New to Medicare playlist on YouTube, and also my best-selling co-authored book, Medicare Breakdown, the Alphabet Soup of Medicare.